What is going on, ladies and gentlemen? Today we are going to teach you guys how to trade options on Robinhood. I'm also going to show you the chain on TD Ameritrade, but I just want to show you guys on Robinhood because I think it's the easiest way to kind of get the visuals and just fully understand how the options work. Because I just think Robinhood's setup is really user friendly. How do you trade an option and what is an option? Here on Robinhood, to trade an option, you just go up here in the search bar and search any option you want. Let's search up Starbucks. Everyone loves Starbucks. Now, Starbucks is trading at $90.16 right now. So let's go into the option chain, and boom. This looks probably very confusing to a lot of you, but essentially all an option is saying that a stock is going to go up to a specific price or it's going to go down to a specific price. When you're saying it's going to go up to a specific price, that's called a call. You're calling that the share is going to go up to a certain price. And a put is the exact opposite. You're saying that an option is going to go down to a certain price. So when you purchase a call and Starbucks is trading at 90.16, you're saying that Starbucks is going to move up. Say we want to buy this 93 call. We are now saying that Starbucks is going to move from 90.16 all the way to $93 or higher at the expiration of January 17th. So if Starbucks is trading above 93, or technically 93.08 because we paid 8 cents for this contract, we won. We make money and life is good. But if we get to January 17th and the market closes and Starbucks is only trading at $92, we lose our 8 cents a share right here. What this 8 cents actually means is $8, because when you're buying a call, you're buying the right to buy the share at a certain price if it goes over that. So say Starbucks goes to 95 at the January 17th, we could exercise this contract, but the stock is trading at 95. We made money right there. We made $200 because the stock's trading $2 more than the strike price we had it at, and we bought 100 shares. Assuming you have the money for 100 shares of Starbucks, because 100 times 93, that's $9,300, I believe. So if you have that in your account, then boom, you're golden. So same thing on the put side. We buy a $88 put at 17 cents. Our break even is $87.83 because we paid 17 cents. So you got to minus what you paid from the strike price. But say Starbucks goes down to 86 before the at the expiration. So let's say that Starbucks goes down to 86 at the expiration and we have this 88 contract. We are selling the contract at $88 instead. So we are able to buy the contract at whatever price it is trading at down here and sell it at the strike price we bought it at when we're doing puts. It's the exact opposite of a call. So when a call, you're buying the contract. A put, you're selling the contract, but you're still buying the option. And I think that's what confuses a lot of people, because these are two different things and they mean two different things, but you're still buying the contract. You're still paying 17 cents for a put, and you still would be paying 8 cents for the call up here if you thought the stock was going to go up rather than down. So I hope that makes sense. That's a little difficult to grasp, but if you're having troubles understanding this, just come on the live streams. We're live Monday through Friday, market open to market close. So if you have any questions, just come to the live streams on the Option Trading Live channel. Alright, so let's go to a different company and I'll explain a little more of what the contract has in detail, and then we'll head over to TD Ameritrade and check out the option chain over there so you can see why I showed you on Robinhood. So we went to Microsoft. Let's go to trade Microsoft options. Let's say we want a later expiration date. Let's go to January 31st. But first I want to show you guys the prices of everything. Just take a good note of all the prices on this weekly because they're all about to change. So boom, January 31st. See, everything moved about double or triple what it was. And that's really important to note because that's just how the market values these contracts. When you have a later date, a stock like Microsoft moves, about $1 or $2 a day. So it's really easy for the market to price these contracts really high because it's very likely that Microsoft will move in either direction very quickly, but you have so much time. So let's look a little more in depth at what the option contract has. So for the option contract, we have the bid and an ask, just like the stocks. If you watch the first video I made, the stock market video, you know a little bit about the bid and ask. It's the same thing on options. The ask is what the market is trying to sell this contract for. The bid is what everyone's trying to buy it for. And just like in the stock world, it's going to be very unrealistic to get a price to get filled at the bid, and vice versa. If you're selling, it's going to be very hard to sell your contract at the ask. So just keep that in mind when you're trading. But the mark's pretty much the median or the middle of the bid and the ask. The previous close is what the option price was before the market closed the previous day. The high is the highest the contract has been today, and the low is the opposite, the lowest the contract has been today. And those are really never accurate on Robinhood, so don't really pay attention to those too much. We also have volume and open interest. Volume is how many of these contracts have been purchased this day, and open interest is how many contracts are open right now. So the implied volatility is just how much people think the stock is going to move. If we go to a stock like Tesla, which is a monster right now, they literally have moved up almost $100 in a week. You can see the implied volatility is a lot higher because people are expecting this a lot bigger move on Tesla. I mean, it's not much higher, but there's some stocks like before earnings that'll have 100%, 1000% volatility because there's so many people expecting such a big move on that contract. And we also have our Greeks, which I kind of described a little bit, but just don't really focus on those. I'm just trying to get you guys a brief description of how options work, because I don't think like any of this stuff makes the game like any different. Like a lot of this stuff is pretty irrelevant. I would say theta is important, so I would look up a little more on theta. Highly suggest anyone new downloads this if you want to get into options trading, because as you'll see, we have a paper money version, and that's the version I suggest everyone gets started with. If you want to trade your own money, just keep it small. Just keep the risk very small. Don't put like hundreds of dollars into contracts, do maybe like 20, 30, 40. Don't do anything crazy, but I highly suggest everyone paper trades before they try to trade options, because options they're pretty difficult, honestly. Like a lot of people have a very hard time understanding how they work, so don't rush into options. Paper trade for the first couple months, few weeks, like just get familiar with how everything works. So here we are, TD Ameritrade. It's kind of slow because we're recording, but it's okay. And all we do on TD Ameritrade is just like trading stocks. If you watch the stock market video, we go and trade, we type in a company we like. Let's type in Starbucks again, and you recognize this. We were here in the last video, and as you can see, it's just like Robinhood. It's just not as visual as Robinhood. It's more basic, and there's a lot more you can do with it. So but but it's still the same thing. We clicked on our expiration date, January 17th. You guys saw that when we were in Robinhood. We got our calls, we got our puts, I don't really like trading options on TD Ameritrade, but it's good to know, and you can paper trade on TD Ameritrade. So it's just TD Ameritrade's beautiful. It's one of the only platforms you can paper trade on that's actually like really good. But you see, we got our calls, we got our strike prices right here. I don't know why the strike prices aren't the other way. Like, I feel like it should go up, if it was going up. But yeah, that's just me. And we got our puts on this side. We got everything. We don't have like our Greeks and stuff, but they're still relevant. I just wanted to show you guys so you know that that's a thing that exists. But I'm not gonna trade options on TD Ameritrade. The market's closed. You can't trade options when the market's closed anyway. I hope you guys learned something today. I hope you guys can figure out options. Just keep studying. It didn't make sense to me the first week or two I was in it, but the more you study, the quicker it's going to make sense, and the more you're in the game, the better trader you're going to become, and you're going to be able to start making profits once you finally know what you're doing. You can get lucky on your first few trades, and that's cool, but really, in reality, you want to learn how to become a good trader. So just keep studying and just keep learning. There's so much to learn in the stock market. Or just make some side cash. You're hustling out here. You work 9 to 5, you want to get some side income going, start making your long term, start trading some options. I'll have more videos on my channel coming. You can come to the live streams. We're live Monday through Friday, market open to market close, and I'll answer any questions for you guys. So don't be afraid to come in and ask questions and be a part of the chat. Go to the trading fraternity, the Colt baby, they got your back. I hope you guys enjoyed this video. If you have any questions, leave them in the comments below, and I'll see you guys in the next video or on the live streams, baby. Let's go!